Hi, good day everyone. My name is Elias M. Bautista and I will be discussing the compliance management, corporate banking, internal audit, and the Bangko Sentral ng Pilipinas of Philippine financial system. At the end of the presentation, you'll be able to define what compliance management, corporate banking, internal audit, and Bangko Sentral ng Pilipinas of Philippine financial system is, and you can explain, differentiate, and discuss the relevance and importance of the said topics. So first, what is compliance management? Compliance management is the process of ensuring that banks comply with the numerous regulatory regulations, rules, guidelines, and industry standards that regulates their operation. Given the banking industry's strict regulation, compliance management is critical for ensuring the integrity of financial system, protecting clients, and managing risks. To effectively monitor and manage compliance for your company's infrastructure, you must first assess which is determine which system are non-compliant, vulnerable, and unpatched. Second is organize, which is prioritizing remediation action based on effort, impact, and issue severity. Third is remediate, wherein quickly patch and reconfigure system that requires attention and last report to ensure that the modification were implemented and report the findings. What is compliance? Why is compliance management important? Effective compliance management assists firms in mitigating legal and regulatory risk, protecting their reputation, and retaining the trust and the confidence of stakeholders, such as customers, investors, regulators, and the public. It is an important phase of corporate governance and risk management, especially in regulated areas like banking, healthcare, and manufacturing. Corporate banking, on the other hand, is um, sometimes we call institutional banking. It is the suite of financial services and products provided by banks to companies, big enterprises, and organizations. Unlike retail banking, which services individual customers, corporate banking focuses on fulfilling the financial requirements of enterprises of all sizes, from tiny firms to multinational organizations. Components of corporate banking. There are a few different segments of corporate banking depending on the needs of a company. Here is a brief description of each and how they function. First is deposit taking institution, which is corporate banking relies on its institution to accept deposit from the businesses looking to earn income. They accomplish this through individual institution or network of commercial banks and credit unions. Second is mortgage firms. These companies handle mortgage for both people and corporation. These companies finance mortgage for borrowers and hand for future consumers who want money. Third is central bank and monetary authorities, wherein this organization governs a location's economy by regulating and overseeing commercial or retail bank in order to reduce inflation and keep the currency stable. S- Small banks and lenders may seek financial assistance or advice from larger organizations. Other financial institutions, some entities such as shadow banks or independent lenders, serve the same duties as bank but are not banks. Fourth is fifth rather. Fifth is brokerage firms, which is it enables transaction between two corporations. These companies frequently profit from sales commission. Sixth is financial technology, often known as fintech. It is a collection of technology tools and resources used by corporate banking to differentiate itself from competitors and traditional banking practices. These may involve blockchain, internet banking, and mobile payment. The main players in corporate banking are Universal Bank, with investment banking divisions and a large balance sheet. Top corporate banking firms include Citi, Bank of America, Wells Fargo, HSBC, JP Morgan, RBC Capital Markets, Truist Financial or formerly SunTrust. Overall, corporate banking is critical in meeting the financial demands and growth goals of firms across a variety of industries. Corporate banks assist businesses in managing their finances, mitigating risk, and capitalizing on possibilities for growth and success by providing a wide variety of financial services and expertise. Internal audits, on the other hand, not only ensure that a firm complies with laws and regulations, but they also help to manage risk and protect against possible fraud, waste, and abuse. Internal audit reports gives management with recommendation for improving present processes that are not working as intended, which may involve information technology system and supply chain management. Internal audits may be conducted on a daily, weekly, monthly, or even annual basis. Certainly, departments may be audited more frequently than others. It may also improve operational efficiency, incentivize staff to follow corporate policies, and allow management to investigate specific areas of operation. There are seven types of internal audits, which is first is compliance audits. A corporation may be forced to follow local laws, compliance requirements, government rules, external policies, and other limitations. To show compliance with these laws, a corporation may appoint an internal audit committee to analyze and gather relevant material before providing an overall judgment on the state of the compliance obligation. Second is the internal financial audit, which is public corporations are obligated to execute specific degrees of external financing auditing, which involves a totally independent third party providing an opinion on the company's financial record. Companies may choose to delve further into audit results or conduct an internal financial audit in preparation for an external audit. Many of the criteria between an internal and external auditor may be comparable. Nevertheless, the nature of independence distinguishes the two types of audits in financial audits. Third is environmental audit, wherein as businesses grows more environmentally concerned, some begins to assess their influence on the globe. This results in an internal audit that examines how a firm acquires raw materials safely, eliminates greenhouse gas emission during manufacturing, uses environmentally friendly distribution techniques, and reduces energy use. Companies that use triple bottom line reporting may conduct internal environmental audit as part of their yearly reports. Fourth is technology or IT audit, wherein they have a lots of variety of purposes. The internal audit might be the consequences of an internal litigation, a business complaint, and or a goal to improve efficiency. A technology-focused internal audit examines system controls, hardware, software, security, documentation, and backup or recovery procedures. The purpose is likely to evaluate overall IT correctness and processing capabilities. The fifth type is performance audit, wherein an internal performance audit focuses on the end products rather than the methods. The organization will most likely have established performance targets or metrics which may be linked to performance bonuses or other incentives. As a consequence, an internal auditor evaluates the outcome of an aim that is not clearly measurable. Six is operation audit, wherein it is more likely to occur when a key employee retires or new management takes over an organization. The firm may wish to evaluate how things are done or if resources are being used more efficiently. During an operational internal audit, the auditor will assess if present staff and procedures are in line with the company's mission statement, values, and objectives. Last is construction audit, wherein it can be performed by development, running real estate or reconstruction organization to assure that not just the physical development of a structure but also proper project billing throughout the project's existence. This mostly entails adhering to contract conditions with the general contractors, subcontractors, or standalone suppliers as required. Bangko Sentral ng Pilipinas or Philippine Financial System. What is BSP? BSP is the Financial Central Bank in charge of devising and executing monetary policy, supervising financial institution, and ensuring the stability and efficiency of the Philippine financial system. The Philippine financial system consists of different organizations, markets, and application of cash in the economy. Overall, the Bangko Sentral ng Pilipinas is critical to ensuring the stability, integrity, and efficiency of the Philippine financial system. It collaborating with other regulatory agencies, market players, and stakeholders to achieve long-term economic growth and development. These are the site reference that the topic of the topic, and that's all. Have a good day.